Let's start with what makes this setup significant. Kaspa price has been sliding for months, downtrend established, pressure consistent, but price is now touching multiple technical levels simultaneously. That convergence is what gets traders excited. Level 1. The 0.886 Fibonacci retracement. This isn't random. Fibonacci levels appear throughout nature and markets. The 0.886 level specifically is a high retracement level. When price reaches this level, it's typically at significant bottoms. Major reversal points often bounce from this level, not because Fibonacci is magical, but because thousands of traders watch it. They place buy orders near it. That concentrated buying pressure creates actual support. Level 2. The $0.24 price zone. This is the lower boundary of the descending channel. Price has been falling within a predictable channel structure. The lower boundary of that channel is where falling price naturally gets support. It's not that support magically forms at channel boundaries, it's that price reaching a channel boundary suggests the move might be exhausted. Level 3. The long-term trend line. This trend line was established before Kaspa's all-time high. It's a long-term trend line from previous major price movement. When price returns to test this trend line, it's testing previous major support. Again, not magical, just historical price behavior repeating. Now, here's the critical insight. All three of these technical indicators are meeting at the same price. The 0.886 Fibonacci level, the 24-cent zone, the descending channel boundary, the long-term trend line, they're all converging. That convergence is significant because it means multiple independent technical signals are suggesting the same thing. Support should be strong at this level. When traders see convergence, they interpret it as confirmation. Multiple signals suggesting the same thing is more reliable than one signal suggesting something. But here's the honest reality. Convergence doesn't guarantee support holds. It just means if support holds, it's meaningful. If support breaks through all these levels, it's concerning. Convergence signals something important about market structure potential selling exhaustion. When price reaches multiple support levels, what's theoretically happening is sellers are running out of conviction. They've been selling for months. Price keeps dropping. But at these support levels, they're losing the ability to push price lower. Simultaneously, buyers are becoming more interested. Price at support levels looks attractive to buyers. They start accumulating. Buying pressure increases. The balance between buying and selling begins to shift. But here's the critical distinction. Convergence doesn't mean reversal is imminent. It means reversal is possible. It means conditions are becoming favorable for reversal. It means if reversal happens, this is where it would likely start. The actual reversal requires something convergence alone cannot provide: returning buying pressure. Convergence creates the opportunity. Buyer conviction creates the actual move. Think about it this way. Convergence is like a floor being built under the price, multiple technical signals creating a floor. But a floor doesn't make the price jump, it just stops the price from falling. The jump requires outside energy, buyers showing up and pushing price upward. So when you see technical convergence, the correct interpretation is, conditions for bottom formation exist. If reversal happens, it likely starts here. But convergence alone doesn't guarantee reversal. The market must actually demonstrate buying pressure for reversal to confirm. Now let's talk about what analyst Finance Freeman outlined, a possible double bottom formation. This is a specific chart pattern that traders watch closely because it often signals bottom formation. So, what's a double bottom? Well, it's exactly what it sounds like. Price falls to a low level. That's the first bottom. Then, price bounces a bit, but you'll notice the volume is lighter. There's really no major conviction in that bounce. After that, price just moves sideways in a range for a while. Then, price falls again and tests that same low level. That's the second bottom. If price bounces from the second bottom more convincingly than it did from the first, that's your pattern confirmation. Why does this pattern even matter? It's because it shows a specific market dynamic. The first bottom might just be a panic sell, weak hands getting shaken out, but after that initial bounce, price falls again. That second drop is what really tests whether the support is actually strong. If price bounces more convincingly from that second test, it suggests the support is real. The pattern Finance Freeman outlined suggests this scenario for Kaspa price touches 24 cents. For the first bottom bounces, somewhat moves sideways and gets a bit choppy, then price falls again and tests 24 cents again for the second bottom, and then bounces more convincingly if the pattern confirms. Now here's what's important about this pattern. It takes time. The sideways movement between the two bottoms is actually crucial. That sideways time allows buying pressure to build up. Weak sellers kind of exhaust themselves and sentiment slowly starts shifting. When price tests support the second time, buyers are just more ready. But, and this is critical, the double bottom pattern is not guaranteed. It's a common pattern, but price doesn't always form perfect patterns. Sometimes price bottoms quickly without a double bottom, and sometimes price forms what looks like a double bottom, but then breaks below both lows. Pattern trading is based on probability, not certainty. If you understand that technical patterns are probabilistic, not guaranteed, you should really like this video right now. Just one click helps the algorithm reach other traders who actually think about risk and probability. Plus, go ahead and share this with other traders watching Kaspa. They need to understand that bottoms are probability zones, not certainty points. Now, let's talk about what happens after the potential bottom formation. Finance Freeman's long-term projection suggests Kaspa could eventually move toward the $1 level. That would represent a massive rally from current prices. But let's be clear about what this projection actually requires. It's not automatic. It's not guaranteed. It's a potential scenario that depends on several conditions being met. First condition, the bottom actually forms. Support at 24 cents holds. Double bottom pattern completes. Momentum shifts from down to sideways to up. This must happen first. Second condition, broader market conditions improve. Kaspa didn't crash in isolation. The broader cryptocurrency market was under pressure. Bitcoin was struggling. Altcoins were getting crushed. For Kaspa to rally to $1, the broader market needs to recover. If Bitcoin crashes again, Kaspa crashes with it. Third condition, the Kaspa ecosystem actually grows. Adoption increases. Real utility develops. Users on the network increase. Transaction volume grows. Real economic activity on Kaspa increases. Without ecosystem growth, there's no fundamental reason for price to sustain higher levels. Fourth condition, demand actually returns. Traders and investors become interested again. Buy volume increases. Sustained buying pressure pushes price higher. Without returning demand, price doesn't move. All four conditions must be met for the $1 projection to play out. That's why analyst Finance Freeman says this scenario would take time. It's not weeks, it's months or potentially longer. Building a bottom, recovering, broader market conditions, growing an ecosystem, and attracting sustained demand all take time. The projection is bullish if all conditions align, but that's a big if. Here's where the rubber meets the road. Everything else is secondary. The critical level is 24 cents. This is the make-or-break price. If 24 cents holds as support, the entire bottom narrative remains intact. Convergence of technical levels mattered. Support is strong. Reversal is possible. The setup progresses as outlined. If 24 cents breaks below, the entire narrative breaks down. Multiple technical levels converge, but support failed anyway. That's concerning. It suggests selling pressure is stronger than expected. It suggests the convergence didn't create actual support. Price could fall further before a true bottom forms. Traders watching Kaspa are focused on this level for exactly this reason. If you see Kaspa bouncing firmly at 24 cents, buying pressure is returning. If you see Kaspa breaking through 24 cents with volume, selling pressure is overwhelming. The level is the signal. This is why trading potential bottoms is extremely risky. You're trying to catch a falling knife. You're buying on the hope that support holds, but support might not hold. If you're wrong, you lose money quickly. If support holds, you make money, but the risk is real and substantial. Let's be honest about what this setup actually is. It's a potential bottom formation, potential being the key word. Technical convergence is promising, the chart setup is encouraging, but it's not confirmation, it's not a guarantee, it's a probability increase. Many traders will see this convergence and buy expecting a quick reversal. They'll be disappointed if reversal doesn't happen immediately. Some will lose money if support breaks. Some will make money if support holds and reversal confirms. That's the nature of technical trading. You identify probable price zones. You manage risk. You let the market prove you right or wrong. You exit if you're wrong. You hold if you're right. For Kaspa specifically, the 24-cent level is everything. Watch if it holds. If it does, the narrative remains intact. If it breaks, reassess the entire setup. Thank you for watching this technical bottom analysis. Kaspa's convergence of technical levels at 24 cents is worth monitoring. Multiple signals suggesting the same thing is meaningful in technical analysis, but meaningful is not certainty. The market will determine whether this convergence creates actual support, or if selling pressure breaks through anyway. The coming weeks will show whether the double bottom pattern develops, or if price drops further. If you want to stay updated on Kaspa's price action, whether 24 cents holds, if double bottom forms, what momentum looks like at potential reversal, stay subscribed. We're tracking when technical setups produce actual results. Check out the other videos on TJCryptoWorld. We've got deep dives on technical analysis, pattern recognition, support and resistance, and everything else you need to trade with proper risk management. I appreciate you watching, I appreciate the trading community, and I'll see you in the next technical analysis.